Nvidia is sharing in the call the China impacts due to changes in export controls. For the second quarter, the chipmaker expecting a loss in H20 revenue of approximately $8 billion. But Jensen just saying at the conclusion of the call that while they are thinking about developing an alternative product to be able to sell into the Chinese market, they don't have anything that they wanted to announce today. To discuss more on what this all means for Nvidia, let's get to CFRA Research Senior Equity Analyst Angelo Zino. Angelo, congrats! You made it through the call. So did we. So what do you make of Nvidia and particularly the China situation?
Yeah, I mean, I think overall you've got to be pretty optimistic where Nvidia is sitting right now. I mean, the guidance, I mean, the results in itself are perfectly fine, solid results. The guidance, when you kind of try to dissect it, I mean, you alluded to the $8 billion in lost revenue there from China, which essentially indicates that the non-China business is running well ahead of expectations, because most of us we're looking at about a $4 to $5 billion hit for the July quarter tied to China. So the fact that you're likely running a couple of billion ahead of expectations in China. As far as China itself is concerned, listen, I think what you're getting here now is almost a de-risking of China in the fact that, hey, listen, you would have been potentially $8 billion above the current run rate, but the fact of the matter is, you now don't necessarily need to worry about another leg down driven by China. And in fact, if we were to see some sort of good news, and we don't think Nvidia is going and Jensen is going to give up on China, so we would expect them to at some point find their way back into China. Once they do, that is a potential catalyst for the shares.
Angelo, I know you got a buy on this name, but when you're talking to your clients and they ask you, hey, what are the key risks I need to think about before committing capital to Nvidia? You tell them what, Angelo?
Yeah, I mean, there's a lot of risks that are still on the table. I mean, I'd say right now, there are still geopolitical risks that you still need to take into account, tariff-oriented risks. I mean, we do have a pending 232 semiconductor investigation that is going on at this point, where we expect to get some clarity on it here over the next couple of weeks or months. Once we get further information on that, there is going to be a tariff, right, on technology products out there, on the hardware side of things. Nvidia largely now is hardware oriented in nature. We think they're going to be able to obviously pass through a lot of those costs, but nonetheless, it is a potential headwind that's looming out there at some point in time. But still, we need to find out and get some clarity on that side of things. I'd say the other thing, when we look out here over the next couple of quarters or years, the trajectory of AI demand, I think was more of a concern maybe 2 months ago, but nonetheless, we're seeing a lot of supply growth in terms of extra compute capacity getting added into the market, not only from the hyperscalers, but from these tier 2, 3 providers, whether it be the CoreWeaves, the Stargates of the world. And if we would get to a point where that supply growth exceeds the demand growth, that clearly becomes worrisome for the AI trade. But I don't think that's something you necessarily have to worry about here clearly over the next couple of quarters, especially given what Jensen just talked about in terms of the emergence of these reasoning models, what they're doing with AI agents and the demand that's providing for compute here.
So one of the questions I have is in terms of some of these other areas that you just were referring to, to counter Josh's question, what are some of the positive things that you're telling people who are calling you that you're seeing? You referred to some of those things, but what are the other growth areas? Like one of the things we were talking about earlier is the fact that, we're really not seeing anything on the robotics side just yet from a revenue perspective. I think there's some other opportunities out there. Any other things like that you're seeing that you think are positives?
Yeah, so I think when it comes to AI, you've got to walk before you can run, right? I mean, you look at 2023, 2024; those were kind of the years of Gen AI. You've now got this inflection here in 2025, which we think will spill into 2026, which is kind of this shift towards AI agents, more complex reasoning models. And I think 2027, 2028 will be the bigger opportunity and massive wave in terms of the physical AI world. So you'll probably see some signs of that obviously here over the next year or two. But the greater momentum we think is probably 3 to 5 years away in time. But nonetheless, there are clearly catalysts, towards the growth of compute out there. I'd say also think about sovereign AI more and more nowadays, especially after the Saudi Arabia deal that we just saw. I think you're going to see a lot more deal making here over the next couple of quarters, and I wouldn't necessarily, be surprised if you saw more Nvidia, in some of these deals that get announced out there in terms of being used as a bargaining chip, and that's clearly going to be a potential catalyst for a company like Nvidia and the broader AI ecosystem.
Angelo, taking a step back here, the question and concerns, leaving China aside for a moment, the concerns were that Nvidia had seen peak revenue growth. There's nothing to change that thesis, right? The company at its peak saw 265% year-over-year revenue growth. Those days are gone. We're in double-digit territory now, and that double digit is only going to decelerate over time. Is that still the case? And if that's the case, what kind of growth can we expect from the stock going forward?
So it's a great question. I'd say, yes, you're going to see more deceleration, especially on a sequential basis. I think you only saw a sequential growth of about 10% this quarter or so. It's going to actually, you're looking closer to low single digit here for the July quarter on a sequential basis. Clearly the China issue is what they've got to digest here before I actually think you do start seeing a reacceleration later this year. But maybe to your point, in terms of the growth rates, I don't think anyone can expect anything along the lines of what we've seen here over the last 2 years. I think that's perfectly okay, because when you look at Nvidia's multiple today relative to what we've seen here in recent memory, it's nowhere near the levels that we've seen. It's trading about 24 times our calendar 26 estimate. So you kind of look at a mid-20s multiple, you look at that free cash flow generation, which now actually helps the thesis in terms of the multiple, whereas you might not be getting the growth, but you are getting the free cash flow generation, and you're going to see more of that being returned back to shareholders. But I think the combination of whether valuation is as well as that free cash flow generation, not to mention, they did reconfirm the fact that they are going to see, or they are looking to expand the margins here as we progress here through the second half of the calendar year. And I think that's a really important point, because there was maybe some concern out there that maybe they wouldn't be able to do that to the degree that they previously alluded to, and they will. And then maybe, in terms of the long-term trajectory, we think this is a company that should be able to grow the top line, at about a 15 to 20% basis on a consistent basis, as things start to level off. But it's going to be lumpy, right? There are going to be cycles here and there. Blackwell is going to be a huge cycle. The B300, Blackwell Ultra, maybe Rubin Ultra isn't going to be anywhere near what we saw with Blackwell. But then when we start looking towards 2027, we get really excited about Rubin Ultra, because there is a change in architecture there. So I think it's going to be lumpy in terms of the growth rates out there. But I think you can pin a 15 to 20% growth rate at the very least. I think that's on the lower end side of things here over the next 3 to 5 years.
Angelo, always good to see you on the show. Thank you, sir.
All right, thanks for having me.